The current price for SMX, Security Matters PLC, is $35.31, representing a massive intraday surge of $16.03, or 83.14% today. As the market remains open, we are witnessing a level of volatility and trading volume that has completely blindsided the average retail trader. While most of the attention in the broader market is usually fixated on the steady gains of Nvidia stock or the long-term stability of Apple stock, the action we are seeing right now in this small-cap technology play is where the real tension between expectation and reality lives. The expectation was that a company with deep historical losses and a history of extreme price swings would continue to fade into the background of the penny stock landscape. The reality, however, is a sudden, aggressive repricing of what investors believe the future of material verification might be worth. This isn't just a simple short squeeze or a social media hype cycle. There is a fundamental shift occurring in how the market views the concept of provenance. When a stock jumps over 80% in a single session on volume that exceeds 10 times its daily average, it forces a question that most investors aren't prepared to answer. Are we looking at a speculative bubble or the birth of a new layer of global trade infrastructure? If you are looking at your Robinhood app or checking your SoFi active investing account today, you probably noticed SMX sitting near the top of the gainers list. The immediate reaction for many is to assume this is a high-risk gamble, something better suited for a quick trade than a serious investment. But the deeper angle that the market is beginning to price in involves more than just a ticker symbol moving up a screen. SMX is positioning itself as the answer to a crisis of trust in global supply chains. We live in a world where sustainability and circular economy are often just marketing slogans. SMX is attempting to turn those slogans into verifiable data by embedding molecular markers into the very DNA of products, whether it is the steel in a skyscraper, the plastic in a soda bottle, or the cotton in a pair of luxury jeans. The market is starting to realize that as global regulations tighten around carbon footprints and recycling claims, the ability to prove a material's history is going to be worth significantly more than the material itself. This is the hidden catalyst driving the price action we are seeing right now. Establishing common ground with the current investor sentiment is easy. Most people think SMX is too risky to touch after an 83% move. They see the 52-week high that used to sit in the tens of thousands and the 52-week low near $3, and they see a stock that has destroyed capital for years. That is a fair and rational assessment. However, the contrarian take, the one that explains why institutional volume is suddenly appearing on the tape, is that the company has entered 2026 with a fully funded treasury for the first quarter and a pivot toward the $90 billion denim industry. The market is moving from a state of expecting failure to a state of evaluating a potential monopoly on material identity. When you look at your Interactive Brokers trading platform and see the bids stacking up, you aren't just seeing buyers, you are seeing a massive recalibration of value. Comment below how many shares of SMX you currently hold or if you were sitting this one out. I'm curious to see if the community thinks this price level is sustainable or if we're heading for a sharp correction by the closing bell. The technical setup for SMX today is nothing short of extraordinary, with over 14 million shares changing hands against an average volume of less than 2 million. The liquidity profile has shifted dramatically. For those using a Fidelity trading platform or checking their Fidelity mobile app, the indicators are screaming overbought in the short term, but the underlying narrative is much more complex. This volume indicates that it isn't just retail traders buying Robinhood fractional shares. There is a level of institutional interest that suggests a deeper involvement. We are seeing a classic example of expectation versus reality. The expectation was that SMX would continue to struggle with its balance sheet and dilute shareholders further. The reality is that the company has secured the capital it needs to survive the next several months while it scales its plastic cycle token. This tokenized approach to material verification is designed to convert real-world recycling events into auditable digital records. In an era where ESG reporting is becoming a legal requirement in Europe and parts of North America, this technology moves from being a nice-to-have to a must-have. For those who use Fidelity Investments or manage their own portfolio through SoFi stocks, you know that timing is everything. The reality of SMX is that it has historically been a story of great tech and poor market timing. However, the current momentum suggests that the timing might finally be aligning with the global regulatory environment. We are seeing traders move away from traditional safe havens like Tesla stock for a moment to capture the high beta moves in these niche technology leaders. The sheer percentage gain today is a testament to how quickly sentiment can shift when the market realizes a company has enough cash to reach its next major milestone. SMX has stated they are fully financed through the first quarter of 2026, which removes the immediate fear of a death spiral dilution event that has plagued the stock in the past. But we have to look at the risks because the reality of investing in small-cap tech is often brutal. Despite the excitement, SMX still reports very little in terms of traditional revenue. They are in the proof of concept and pilot program phase with many of their partners. If those pilots don't convert into long-term, high-margin contracts, the current stock price will be impossible to sustain. The tension here is that the market is currently buying the story, not the earnings. This is why you see such high volatility. When you are self-investing through a platform like Robinhood Stocks or Interactive Brokers platform, you have to decide if you are comfortable with a stock that could easily give back half of its gains in a single day if a major partner pulls out or if the next earnings report shows no commercial progress. The future outlook for SMX depends almost entirely on the adoption of the plastic cycle token and the successful rollout of their denim verification program in the first half of 2026. If they can secure a master agreement with a global fashion conglomerate or a major plastics manufacturer, we could see a scenario where the stock moves from being a speculative trade to a core holding for sustainability-focused funds. On the other hand, the risk of competition is real. While SMX has a strong patent portfolio, there are other companies in the digital traceability space. The advantage SMX has is the physical-to-digital link, the molecular marker that stays with the material even after it's been melted down and remade. Most other solutions rely on labels or digital certificates that can be separated from the actual product. This enforceable scarcity of material verification is their primary competitive moat. As we wrap up this analysis, it's clear that SMX Security Matters PLC is at a critical crossroads. The expectation of a quiet, failing penny stock has been shattered by the reality where the company is fully funded, expanding into massive new markets like denim and seeing its highest trading volume in years. The stock price of $35.31, up over 80% today, reflects a market that is suddenly waking up to the value of material provenance in a regulated world. Whether you are trading through Robinhood Cash Management, managing your Fidelity brokerage account, or using SoFi Active Investing, the lesson here is about the power of a narrative shift. SMX has moved from being a company that might have a product to a company that does have a solution for a global problem that is finally being enforced by law. The insights we've gathered today suggest that while the immediate price action is extreme, it is rooted in a fundamental change in the company's financial stability and strategic focus. The contrast between the speculative history of the stock and the very serious infrastructure it is building creates a unique opportunity for those who can navigate the volatility. Remember, this is a stock that requires constant monitoring, whether you use the Fidelity mobile app or the Interactive Brokers platform to stay updated on the latest filings. The move we saw today is a loud signal that the market is ready to price in the future of the circular economy, even if that future is still being built one molecular marker at a time. To conclude, the day started with an expectation of business as usual for SMX, but it quickly transformed into a high-stakes demonstration of market demand for traceability. We have seen how the company's molecular marking technology, combined with its 2026 funding security, has created a perfect storm for this 83% price increase. We compared this niche play to the broader moves in names like Tesla stock and Nvidia stock to show that while the scale is different, the psychology of growth and proof remains the same. Whether you are a fan of Robinhood stock trading or prefer the depth of the Interactive Brokers platform, today's move in SMX is a clear example of why we stay engaged with the market. It's about more than just the money. It's about identifying the moments where the world's needs and a company's capabilities finally collide. Keep an eye on the closing figures and the after-hours activity, as the battle between the bulls and the bears at this $35 level will likely set the tone for the rest of the week.